in partnership with CommSec.
Joining us from CommSec is Tom Piotrowski. Good morning to you, Tom. Bloomberg reports that Iran is racing to get its oil out into the world in an attempt to maximise revenues as the Israeli strikes continues. And then we saw a sharp drop on the oil price on the intraday. Do you think that that's connected at all?
Look, it's a pretty fluid landscape, Kenny, when it comes to energy prices at the moment. So, yes, you're actually well informed there. There was a solid drop intraday from the peak of the after-hours session, bearing in mind that US markets were closed last night, so that thins out the participation a lot. Important to note, though, that West Texas Intermediate crude oil still remains within sight of the highest levels in around 6 months at the moment. So there is still that underlying concern about energy security, energy assets not being affected by the conflict. So that's the sort of thing that investors are watching very carefully from day to day, hour to hour. And it's important in the context of what's going on at present. As we head into the weekend, that brings with it heightened event risk. So that in itself is part of the reason why you saw US and European markets move lower overnight. The US markets were closed to observe the Juneteenth public holiday, but notwithstanding, there's still participation in the futures market and after hours trade. And to that end, we saw losses of around, a short time ago, we saw losses of around 0.9% for the Dow and the S&P 500, the Nasdaq down by about 1%. So they'll be back online tonight as far as the day session is concerned in the US, but European markets were lower across the board as well, led lower by the German index, which was down by 1.3%. This week has been defined by central bank decisions. A day ago, we were talking about the US Federal Reserve's more defensive conversation around the prospect of rate cuts, which the markets weren't terribly enamoured of. Last night, we saw the Swiss National Bank and the Norwegian Central Bank cut interest rates, and it seemed as though the decision from the Bank of England may have been a closer outcome towards cutting rates than what the market had initially estimated under the circumstances, given the economic challenges in different jurisdictions, not surprising. So other things to point out in European trade, energy stocks were the most improved. So familiar energy names in that landscape, Shell, BP, up by the most part of 2%, Repsol up by more than 2%. Technology stocks underperformed in European trade. So that, in addition to underperformance from the consumer discretionary stocks as well, was a bit of a feature. In local terms today, Kenny, the futures are pointing to a decline of 1/3% for the ASX 200, but you would expect, given the Northern Hemisphere trends, that energy names will be a little better bid, but there'll be headwinds for resource-facing stocks as well, given the trends that we saw out of the European sphere. As I said, event risk is what will be on investors' thinking as we move through the regional session today. So that 0.3% decline that we're expecting for the start might be a little bit different towards the end of the day. The Aussie dollar is trading at 64.7 US cents.
Tom, thank you. We'll check in with you again soon.